Hi, and good evening, everybody, if you're in Europe. Good afternoon if you're on the Pacific Coast, or if you're on the eastern seaboard, I should say, of America. And, well, good morning if you're on the Pacific seaboard. Welcome to today's webinar, which is titled Grow Your Own Green Oil Field. Now, we conduct these webinars every Thursday. And you can always go to the front page of our website, which is www.costaricainvest.ie, to see our upcoming webinar schedule, and you can book in for any webinars that interest you. We do record these webinars, and if you look in the free downloads and media area of our website here, in this area there on the right-hand side, you can get access to recordings of previous webinars. Now, for those of you attending a webinar for the first time, you'll see a little control panel on the right-hand side of your screen, and there's an area there in which you can ask questions. At the end of this webinar, we will get to as many of these questions as we possibly can and answer as many of them as we can get to. What I always recommend to people is that if anything pops into mind at all, anything that I haven't covered properly or haven't explained very well, just type in a question about it. I won't answer it there and then, but at the end of the webinar, I get to as many of those questions as I possibly can. So, today what we're going to talk about is the secret that Texan oil men already know, and that is that an oil field is a great investment. It provides regular income and increasing prices. But we're going to tell you a little more today. We're going to discuss an opportunity that you probably don't know so much about, and that's that a green oil field is an even better investment. It's a one-of-a-kind opportunity. Now, what can you expect from today's webinar? Well, our opportunity is located in Costa Rica. So, of course, we're going to talk a little bit about Costa Rica. We're going to talk about real estate in Costa Rica, real estate purchase and real estate ownership in Costa Rica. Of course, we're going to talk in detail about biofuels. We're going to talk about the renewable energy farm and the launch offer. And there is a bonus available to those of you on this webinar today. And I will tell you a little bit more about that at the end of the webinar. First of all, a little bit about me and about Costa Rica Invest. I've been involved in ecological hybrid investment and development opportunities for the past 5 years. The companies that I choose to work with all have a very high level of success. We're sticklers for detail, and we always carry out a very thorough due diligence before we agree to work with or represent any company. The criteria by which we choose a company or project to work with are that we like projects that are involved in development land, which we combine with agriculture and commodities. They're green, eco-friendly, and sustainable. As I mentioned, we only work with high-quality, reputable companies with a strong track record who we enjoy working for. We particularly like opportunities which cater for larger investors, of course, medium investors, but also for smaller investors. And we only look at opportunities which have high potential yields for our clients that have a very strong ecological aspect to them. Now, our partners in this project are United Biofuels of America and Day Group, and they tick all of these boxes. Now, we've all discovered to our cost that many of the traditional investment opportunities that we invested in and put our trust in have proved lacking. Indeed, I certainly know I've discovered that to my cost, having invested in some Irish bank shares, which are now worth zero. The bottom line is, of course, that no investment advisor cares as much about your money as you do, or is as engaged at making it grow. But if you had access to an investment which combines a number of asset classes, the first of which doubles in value every 10 years, the second asset of which Goldman Sachs describes as akin to investing in it is akin to turning the clock back to the 1990s and investing in the PC revolution. The third aspect or asset in this class has historically seen average per annum returns of 20%. And when you combine everything together, it's giving a conservative per annum return of 38.2% or a 382% return of investment over 10 years. And even better, these are real assets and they're in your name. Now, as I mentioned, our partners in this group are Day Group and United Biofuels of America. And so let's jump right in and tell you a little bit about Costa Rica, because that is where this opportunity is located. Now, I know there are a number of you on the call who are very familiar with Costa Rica, but I'm sure there are some of you who maybe don't know so much about it. So I'm going to give you a little bit of background. So where is Costa Rica? Well, it's in Central America. It's the oldest democracy in Central and Southern America, with more teachers than policemen, and it has a literacy rate of 96%. This year, they're going to spend more than 25% of their entire national budget on education. and Costa Rica has a fantastic climate. People in Costa Rica live longer than most other places in the Western Hemisphere, with an average lifespan of 79 years of age. And Costa Rica is at the junction of two very large continents, Northern and Southern America, and it contains over 5% of the world's biodiversity. It's the country that practically invented ecotourism, and it ranks really highly in a number of polls. They're ranked third in the world in terms of environmental performance, and that study is carried out every 2 years by Yale University. They're ranked number 1 in the world by the Happy Planet Index, which is called, and that index for research is carried out by the New Economics Foundation. It compares the happiness of a nation to the damage it does to the environment in pursuit of that happiness. So in Costa Rica, there's very little damage done to the environment, and they're very happy people. In fact, a Gallup World Poll shows that Costa Rica is the happiest place in the world. Costa Rica is the 7th most politically and socially stable country in the world, and that study is carried out by the Economist Intelligence Unit. And that's a fact that often shocks people, that the 7th most politically and socially stable country in the world is located in Central America. That's, it often boggles people's minds. By comparison, the USA ranks number 56 in that same ranking. Costa Rica is the most prosperous country in Latin America. Now, Costa Rica has preserved more than 25% of its surface area as natural park and forest reserve, and that's never going to be developed. And it plans to be carbon neutral as a nation by 2021, and that's the 200th anniversary of their independence. It's amazing how more than 95% of their energy requirements come from renewable resources, and it's amazing how they've achieved this. 20 years ago, the Costa Rican government recognized that there were 2 areas of government in conflict, the Department of Energy and the Department of the Environment. Energy wanted cheap energy, and that often came at a cost to the environment. So 20 years ago, they decided to put one minister in charge of both. As a result of that decision, they took a 50-year view on their energy requirements, and they invested hugely in hydroelectric, wind, and geothermal power. At that time, other countries thought they were crazy. Oil was cheap, and these technologies were very, very expensive. Now, 20 years later, Costa Rica produces 95% of its energy from these renewable resources, wind, water, and geothermal power. And other countries look to Costa Rica and the inspired decisions that they made 20 years ago. So Costa Rica may be a very small country, but it's got very big goals. They plan, as I mentioned, to be carbon neutral by 2021. And to achieve this, they've got a number of incentives and channels in place. But last year, they planted 7 million trees. That's more per head of population than anywhere else on the planet. But to achieve this carbon neutrality, they're going to have to continue to plant more trees and preserve more land. And of course, that's going to add to the value of existing development land by reducing its supply. Costa Rica is a very attractive tourist destination. And that industry, the tourism industry, is worth over $2 billion a year to Costa Rica, and they intend to grow that further. Last year, in 2010, in comparison to 2009, there was an increase of 10.5% in visitors year on year. So that's a growing aspect of their economy. But Costa Rica is not just interested in the one-off visitor. They want people to come again and again and preferably own a home in Costa Rica so that they spend even more dollars there. To do this, they've made the process of emigrating to Costa Rica very straightforward. And you and I have the same land and property ownership rights as a Costa Rican citizen, and that's enshrined in the Constitution. More than 1% of the population is already North American expatriates and retirees. Why are they looking to Costa Rica? Well, they're looking for a lower cost of living, safety, security, great healthcare, and a fantastic climate. Cost of living in Costa Rica is about 50% of the cost of living in the USA, and healthcare is a fraction of the price. So you can imagine living in a beautiful climate in a safe place with great healthcare for a fraction of your current cost of living. But Costa Rica is not just a pretty place to sit on the beach. It's looking elsewhere to generate revenue, and it's looking to high-tech industry. A combination of lucrative tax breaks, a highly educated workforce, and low labor costs has successfully attracted many, many multinationals. And Costa Rica is very, very business friendly. Let's talk a little bit about the economy of Costa Rica. At the beginning of 2010, in fact in May of 2010, the IMF issued a very positive report on Costa Rica, and they highlighted that economic growth rose in the second half of 2009, remained strong in the first quarter of 2010, and they stated that economic recovery in Costa Rica was firmly underway. Was the IMF, I should say, correct? Yes, absolutely. Because in 2010, national exports were up significantly in comparison to 2009. 16.8% in total. And in fact, the economy grew by 4.5%, and the expectation is that the economy is going to grow by 5% in 2011. Let's talk a little bit about land in Costa Rica. There are two drivers which are going to affect land prices in the short to medium term in Costa Rica. The first of which is baby boomer retirees. Over 100 million baby boomers are going to retire over the next decade. Some estimates suggest that up to 20% will seek to retire abroad. And what are they going to be looking for? Well, they're going to look for safety, good climate, quality healthcare, lower cost of living. Costa Rica ticks all of these boxes. Now, of course, Costa Rica couldn't possibly take in 20 million retirees. It only has a population of 4 million right now. But a significant number will look to Costa Rica to retire. And that's going to push up demand for land in Costa Rica. The second big driver for land price growth is Costa Rica's eco plans. Do you remember that I mentioned that they plan to be carbon neutral as a nation by 2021? And to do that, they need to plant more trees and preserve more land. Now, that process has already started, and if you do a simple Google search, you will see that Costa Rica has acquired the funds to preserve a further 1% of its surface area, increasing the protected area from 25% to 26%, and that process is going to continue. So, what have we got going on here? We've got increasing demand and reducing supply. Increasing demand by these baby boomer retirees, reducing supply because of Costa Rica's eco plans. And simple economics tell us that that means that prices are only going one way, and that's up. But of course, when it comes to investing in land, there are three things to consider: location, location, and location. And we're going to discuss that particular aspect of this investment in due course. But what if we combined a land investment in a great location in Costa Rica with a very valuable commodity that's increasing in price daily? And that same commodity, the International Energy Agency's 2010 World Energy Assessment, estimates that supply needs to increase by 400% over the next 20 years. Well, to talk a little bit more about that, we're going to talk a little bit more about the renewable energy farm opportunity. So, here we've got our renewable energy farm opportunity, and as I mentioned, our partners in this project are United Biofuels of America. United Biofuels of America were selected by Shell Oil last year as one of the top 25 global energy entrepreneurs. What is the renewable energy farm opportunity? Well, it's real estate backed up by biofuel income. The land is in a hotspot. Now, that's a hotspot for biofuel growth, but also for development land appreciation, and I'm going to cover that in some more detail. We're going to talk a little bit about how combining these factors makes a very smart, ethical, and profitable investment. So who are UBA? Well, United Biofuels of America is the first biofuel consultancy and development organization in Costa Rica, and they have been working in outreach and planning with different governmental bodies throughout Central America, not just in Costa Rica, although they are based in Costa Rica. They've been primarily focused, apart from the last 2 years, working on the commercialization and deployment of biofuels for the macro or larger investor. They have over 4.5 years of research and development, and most of that R&D has been focused on best practices in agronomics. Their partners, they work with Earth University, and many of their agronomists are from Earth University. As I mentioned, Shell Oil nominated them or appointed them as one of the top global energy entrepreneurs. Recope are their Costa Rican partners who buy the biofuels from them. They work with International Energy Advisors. The Day Group Costa Rica News does a lot of coverage of UBA in there. One of their big events is the Jatropha Harvest Experience, which is something that they put on every year. It's the world's largest Jatropha conference. And at that Jatropha conference, they bring together many, many different aspects of the Jatropha industry, from farmers to buyers, to refinery owners, to governmental agencies and government bodies. And this, as I mentioned, is the largest Jatropha conference in the world. In fact, it's going to become a twice yearly conference from now on. Up to this year, it was once yearly, but demand is so high, they're going to increase it to twice yearly. Essentially, they run it to promote and facilitate biofuel development throughout Central and Southern America. UBA also promote the Million Gallon Challenge, which came about a couple of years ago when UBA were approached by the United States Department of Defense contractors who were developing a technology to convert Jatropha biofuels into JP8 or jet fuel. Their requirements was 1 million gallons a day. So UBA began a very intensive research program to be able to supply them with this 1 million gallon requirement. Out of that came their 1 million gallon challenge. And they've been promoting this through their Jatropha Harvest Experience. And UBA have already over 80,000 hectares of land pledged in to be involved in this 1 million gallon challenge. In the process of developing the 1 million gallon challenge, UBA came across some very important information. There's an extreme supply-demand gap. UBA are approached daily with requests from refinery owners for 40 metric tons of oil a month, 25 metric tons, 10 metric tons, 50 metric tons, and they simply cannot produce enough biofuel to meet this demand. The answer to this is to put more plants in the ground. Now, supply is going to continue and demand is going to continue to grow because biofuels are a mandated product. So there are more and more people who, by law, have to involve themselves in biofuels and supplement their fuel systems with biofuels. In addition, UBA are now also advising all of their macro investors that to guarantee their own supply of biofuels, they need to invest in land and in their own biofuel plantations. So, anytime that you have a supply-demand ratio that's so extreme with a mandated product, which literally means that you have a guaranteed end buyer for every liter of oil you produce, then an opportunity exists. And the solution, as I mentioned, is quite simple. More plants in the ground. Many, many, many more oil-bearing plants in the ground. The other thing that UBA noticed as they were pursuing their 1 million gallon challenge was that there was a big demand from smaller investors to get involved in biofuels. As I mentioned, up to a year and a half ago, effectively UBA only worked with the very largest or macro investors. But they were getting, demands or inquiries from smaller investors. How do we get involved? We got 50,000, 100,000, 200,000 to invest. How do we get involved? And quite simply, UBA did not have an opportunity for them. So they recognized that to really meet this challenge, to meet the biofuel requirements, they needed macro and micro investors. They wanted to intercrop oil-bearing plants, commercial developments, developers, intercropping food cooperatives, national biofuel programs. They needed investors that are in the know. They needed more plants in the ground. And this extreme supply-demand gap actually gave rise to the renewable energy farm opportunity. So this is a typical Jatropha plantation. And we're going to talk more about Jatropha and what Jatropha is in a few minutes. Jatropha grows extremely well in the tropics, and the Jatropha plantation in the renewable energy farm is broken up into parcels. These parcels include the land, the roads, and the electricity. These are the investment highlights of the renewable energy farm. It's a low break-in investment of just $35,000, and that $35,000 will get you 5,000 square meters of titled property in Costa Rica, in the growth market in Costa Rica. It's a fully managed plantation, and you'll have over 800 income-producing biofuel trees on your lot. The biofuel income over the investment term is that's actually slightly incorrect. It's written there as 39,000. It's actually slightly higher than that, and I'll cover that later on. It's in fact about 44,000. The property valuation over the investment term is 119,000. As I mentioned at the very beginning, this is titled Income Producing Property in Costa Rica with a 38% annual return on investment. We had mentioned earlier that this is an intercropped model. Now we intercrop Jatropha and Maca uva palm for a maximum return of investment. Jatropha is a great producer and it starts to produce from year one, although it produces very little in year one, but it's in maximum production in year 4. And it will continue to produce for up to 50 years. We intercrop with Maca uva palm, and the reason we intercrop with Maca uva palm is that Maca uva palm produces a huge amount of oil. The downside of Maca uva palm is that it doesn't produce anything at all for the first 4 years. But intercrop together with Jatropha, you get the maximum possible return. UBA only grow proven feedstocks. As I mentioned, UBA have done 4.5 years of R&D specifically into this intercropped model in Costa Rica. They intercrop, as I mentioned, the Jatropha and Maca uva palm. And here are some of the highlights of both of these plants. Jatropha, which is the one on the right, unfortunately the slide hasn't made very clear, but underneath the lines on the right you can see there is the word Jatropha there. So Jatropha has been selected by the US Department of Defense as the #1 drop-in replacement for jet fuel. Jatropha, as I mentioned, begins producing in the first year. It can produce between 800 and 1,200 gallons per hectare without significant inputs. It will go higher than that. There's a 35 to 42% oil content. It's not a food crop, and it outperforms other feedstocks on return on investment and net energy. Maca uva, on the right-hand side, is one of the multiple oil types in demand. It's easy to grow. It can produce up to 4,200 gallons per hectare and it has an oil content as high as 60%. It's very easily intercropped with Jatropha, and it's a proven, viable agro product in Costa Rica. We're going to turn the clock back a little bit. Rudolf Diesel invented the diesel engine in 1893. He created it initially to run on biofuels, specifically on peanut oil. In 1912, he presented it at the World Expo, where he quoted that the use of vegetable oils for engine fuels may seem insignificant today, but such oils may become in the course of time as important as petroleum and coal tar products at the present time. And here we are now, 100 years later, with various mandates and protocols all over the world to grow biofuel. And so Rudolf Diesel's words have come to pass. Why is biofuel mandated? Well, there are a number of reasons for that. Fossil fuel and biofuel prices will continue to rise dramatically over the coming decade, and analysts are predicting very large increases. In fact, as we've all probably know, the cost of oil is over $100 a barrel this year, and Goldman Sachs are predicting that in the next decade it's going to reach $350 a barrel. We have reached peak oil, and peak oil means that the supply of petrochemical oil is going into terminal decline. In other words, we've reached maximum production and now we're in terminal decline. Countries like China and India have already overtaken the US in terms of energy consumption. So demand is increasing, supply of oil is reducing, and one of the main replacements, a part of that's the solution for our energy gap that's developing, is biofuels. And biofuels have been mandated. Over 127 countries in the world have already mandated biofuels. Mandated means that they have put into law a requirement that biofuels either be blended in or used with existing fuels. There are industry-wide mandates on aviation, transportation, Kyoto Protocol, and indeed in Costa Rica there's a national biofuel blend requirement by 2012 that there is a 12% blend of biofuels in Costa Rica by the year, a 10% blend by the year 2012. So UBA had identified this gap in demand, so this extreme supply-demand gap, and demand from smaller investors to get involved in the biofuel industry. And so they went to their board and explained this. And so they came up with the renewable energy farm opportunity, which is specifically aimed at micro-investors. Now, the main points that they tried to develop the project around were that it have a low entry point, and the entry point is $35,000. That the investor had to have the security of titled land real estate, so that the investor owned the land, that it wasn't just that the investor put the money in and held some plants on land that somebody else owned, but the investor actually owned the land themselves. There are a lot of opportunities in biofuel investments out there where you're simply putting dollars into a fund, but you actually have no ownership of anything. And this is a very important point for us to be able to offer to investors: titled real estate security. And because this titled real estate also has exceptional appreciation potential. And this is why many of the other biofuel investment opportunities do not give you title of the land. They simply lease the land to you for a period because they want to hold on to that valuable asset themselves. But in the renewable energy farm opportunity, you own the land. Another aspect of the investment that UBA discussed with their board when they were putting this together is that the investment had to pay for itself within 10 years or less with biofuel returns. And that they also aim for a combined return of investment of over 300% over the term of the investment. So they came up with renewable energy farms in what we call hotspots. So they sent their teams out to find hotspots. A hotspot was a piece of property, land or area, that's going to see rapid proven development growth over the next 10 years. And it also had to have ideal growing conditions for biofuels. They identified 4 or 5 hotspots in Costa Rica. And the one that we're talking about today is the renewable energy farm in the southern zone. And there are a number of very interesting factors affecting land prices, or that will affect land prices in this area going forward. The renewable energy farm in the southern zone is in Buenos Aires canton or county. The entire southern zone has not seen the development that the rest of Costa Rica has seen. It's very, very beautiful, but the infrastructure in the area is not as advanced as elsewhere in the country, and access is relatively poor, so it takes you a long time to get there. But the Costa Rican government have made a commitment to improve access to this extremely beautiful area of Costa Rica. And they have a plan, an approved plan, for Palma Sur Airport to turn that into the 3rd national airport in Liberia. The renewable energy farm, or in the southern zone, the renewable energy farm is 45 minutes from this new airport. Now, we do have history as to what happens to land prices when a new international airport opens in an area. Previously, Costa Rica only had one international airport, which was in San Jose, and they decided a second one was needed, so they opened a second one in Liberia. Within 2 years of that airport opening, land prices had quadrupled in that area. Improved access, increased demand, increasing prices. We think that the same is going to happen in the southern zone, and we're within 45 minutes of that airport. The second large project that's happening in the southern zone is that the second largest infrastructure project in Central America is taking place there, which is the development of a very large hydroelectric dam. This hydroelectric dam is so large, it's not only going to supply electricity to Costa Rica, but it's also going to supply electricity to Costa Rica's neighboring countries. In line with the development of this dam, there needs to be improved road access and improved infrastructure in the area. And this is another driver for improved access and improved infrastructure into the area. And improved access, improved infrastructure means more tourists, more demand. The southern zone is also considered the best agricultural area in Costa Rica. And UBA already have a number of plantations there that are achieving very high yields. The renewable energy farm is also quite close to Panama, Golfito also, Corcovado National Park, and some of the best rated beaches in Central America. This is actually a river on the property in the renewable energy farm. So here we have just a very quick map image of the renewable energy farm itself. You can see some of the lots there. Just a quick reminder, what is this investment? Well, it's in biofuel producing Jatropha Maca palm. The investment provides annual revenue and land appreciation and growth. Tenure, we've put a period of 10 years in here, but of course you own the land, you own the plants, you can hold on to it for as long as you want. And remember that the Jatropha will produce for up to 50 years at maximum production. The Maca will produce for 25 years. So as the Maca production begins to decline, you would simply plant more Maca trees and take the older ones out. Your protection in this, of course, is that you own the land title. Property size is 5,000 square meters and your entry point is $35,000. Let's have a look at what the numbers are. So, biofuel income. As I mentioned, the Jatropha will produce in year 1, but it'll produce very little. Now, for the purposes of our projections, we have assumed that it will produce nothing in year 1. Year 2, you should get about $900 in biofuel income. Year 3, it'll rise to $2,000. Year 4, about the same, about $2,000. But in year 5, you will get a very significant jump in production because the Maca will kick in. So between years 5 and 10, which is 6 years, you will see $37,200 over those 6 years. Total production from biofuels, about $42,100 over the 10-year period. Let's have a look at the property valuation. Now, we know that serviced lots in this area are priced significantly above $35,000. Typically, they'd be in the $70,000 to $100,000 range. And this is something you can check yourself by simply going on to Google and doing a property search in the area. So, we have assumed that once the infrastructure, roads, water, electricity are in place, that the value of your lot will double from $35,000 to $70,000. We've assumed a 7.5% per annum increase for the first 4 years until the opening of the new international airport, and thereafter we've assumed a 10% per annum increase. That will give you a total property valuation of $154,000. So your $35,000 would turn into a total of nearly $200,000 over a period of 10 years. $42,000 in income, $154,000 in capital appreciation. Now, I must highlight that this assumes no increase in biofuel prices. For the purposes of these calculations, we've assumed that biofuel prices do not increase at all over the next 10 years. But we know that petrochemical oils are decreasing and that biofuel demand is increasing. We think that the oil prices are going to continue to rise, but for the purpose of this calculation, we've assumed that biofuel prices stay static for the 10 years. So we like to be conservative. One of the questions we're often asked is, how does this investment compare to a condo investment? Now, we've had a look around, and a condo in this area typically costs about $220,000. Now, for $175,000, that could buy you 5 lots in the renewable energy farm. Using the same calculations as previously, the land value would be $770,000 in 10 years, and your income would be $210,500, giving you a total value in 10 years of nearly $1 million, $980,500. A condo, by comparison, if we assume that it more or less doubles in value over the 10 years, it may be worth $500,000 in 10 years. In order to get income from it, you would need to rent it out. But of course, to rent it out, you need to pay a management company. That sucks up a lot of your income, and you also need to maintain it for the 10 years. We've consulted with some experts, and they reckon that you would be doing quite well to generate $50,000 in profit revenue in your pocket over that 10-year period. So the total value of your condo is $550,000. Total value of your renewable energy farm investment, almost $1 million. Great advantages to the renewable energy farm is that you own the lots. In this case, you own 5 lots. So you could liquidate one whenever you needed to. Say you needed some income or a lump of money in 5 years. You could simply sell one of those lots. You own the lots. If you own a condo, of course, you can't sell 1/5 of your condo. You either sell the whole thing or you sell nothing, none of it. Of course, one of the great disadvantages to a condo in 10 years is that now you have a 10-year-old condo. You've got the ongoing maintenance requiring new appliances, ongoing maintenance, and all of that good stuff. So what are we talking about with the renewable energy farm here? Well, we're talking about flexibility. Multi-purpose real estate gives you all the flexibility you want in your investment. And that's very important in investments. Quite often people enter into investments where they have only one way out of that investment. They have no wiggle room. There's no, if their circumstances change, they're locked in. There's only one way out. The great advantage to this investment is that it's very, very flexible. You have the biofuels growing on your land producing income. You have got the capital appreciation of the land increasing in value. You have one hedging against the other, basically. If you own a number of lots, you can sell one lot off if you needed to. If you plan to develop the lot yourself, perhaps you plan to have a home there yourself in 10 years, you can develop and put a home on one of those lots yourself. So you could sell one of the lots and use the returns from the sale of one of the lots to perhaps finance your home build. Some more highlights of the Renewable Energy Farm program. You can opt out of the biofuel program at any time. So in other words, if this is a fully managed program, UBA look after all of the biofuel production for you on your land. They charge you a fee. The fee is 10% of the return from that per annum. Now, the great advantage to that is, of course, UBA are as engaged at getting you a high return as you are. Because of course, the higher the return they get you, the bigger their, the more their 10% is worth to them. But you can opt out of that biofuel program at any time simply by giving UBA 90 days notice. You can build your home on that lot at any time. These are serviced lots. They are development lots. They have roads, water, electricity, and you could develop these lots at any time. You could run your house off the grid if you wanted to. You could take, effectively, if you built a home on one of these lots, it would be like living in a beautiful tropical orchard, and you could use the Jatropha oil yourself to run your house off the grid if you wish. So how do you get involved? Well, quite simple. You contact us. You reserve your renewable energy farm investment parcel. You'll receive and fill out, return your investment package forms, and then once you're invested, you receive your green Oilfield national biofuel certificate and your national registry certificate showing that you own the land. And you begin earning income as your land appreciates. So it's a very, very simple process. Thought I'd just very quickly show you some images of some of the beautiful wildlife in the southern zone of Costa Rica. This is an extremely beautiful area. Incredible biodiversity, incredible wildlife. Now, I did mention at the beginning of this presentation that we do have an offer for those of you on the call today. For those of you on the call, included if you decide to invest, and clearly you will have more questions and we will get to as many of those as we can, but if you decide to invest in the renewable energy farm opportunity, we will deliver your land to you already in a Costa Rican SA or limited company. Now, this is worth up to, typically lawyers would charge somewhere between $500 and $1,000 to set this up for you. There are taxation and efficiency advantages to holding your land in Costa Rica in a Costa Rican SA, and I can go through those advantages with you offline, but suffice it to say, it's better held in a Costa Rican SA or limited company than directly in your own name. We always advise people, if they're owning land in Costa Rica, to hold it in a Costa Rican SA. There are tax advantages, as I mentioned, and also when you want to sell the land, instead of having to transfer title from your own name, you simply sell the company that the land is held in. So there are advantages to that. The other thing that investors who invest from this call today will get is that you can have a ticket to one of the upcoming Jatropha harvest experiences. You can pick the one that suits you, and those tickets are worth $1,500 each. $1,500 for each lot. You can get one of those tickets, and that will be given as well. So how do you get involved? Okay, well, quite simple. First of all, our email address is info@costaricainvest.ie. That's info@costaricainvest.ie. Please send us your name, your phone number, and the number of lots that you might consider investing in. and obviously you'll have more questions, and we can go through those questions and go through the various paperwork with you, show you what's involved, ensure that this is the right investment for you, and then we can proceed that way. So at this point in time, we're going to move on to questions, and I see a number of questions.